Brookfield Asset Management is one of my largest positions, and it is a stock that I have been following on my channel for quite some time. The company recently reported its third quarter financial results and gave some pretty interesting updates to the public. I went through the report, the letter to shareholders, the transcript, and the earnings release to find all of the highlights that investors need to know. And in today's video, I'm going to share everything that I found with you. Additionally, my Patreon members have already received my thoughts and analysis on Brookfield Asset Management's third quarter earnings reports ahead of me making this video. So if you would like to get my up-to-date thoughts on stocks before I get the chance to make videos, then consider joining my Patreon. By doing so, you will also be helping support my channel. But with all that being said, let's now dive into Brookfield Asset Management's third quarter earnings results. So here are some of the highlights that Brookfield reported. Right away, we can see that they raised $61 billion of capital year to date, and they remain on track to achieve capital raising target of close to $150 billion. The company also has $102 billion of dry powder available to deploy into attractive market opportunities. So they are sitting on over $100 billion of capital now. The president then says, "We had an excellent quarter from a fundraising perspective. We raised $61 billion of capital year to date, with $26 billion of that capital in the third quarter." And then further down they say, 2023 is shaping up to be an excellent year for capital raising, which sets the stage next year for excellent earnings and dividend growth, with fundraising momentum continuing to ramp up in the fourth quarter. We will remain on track for close to our $150 billion capital raising target. So this is going to be a record year for Brookfield Asset Management, and they are expecting to raise again $150 billion this year. But let's move on to the company's actual reports here. And this underlined segment says, BAM owns a 25% interest in our asset management business, and the remaining 75% is owned by Brookfield Corporation, which is the ticker symbol BN. In order to provide meaningful comparative information, the following discussion relates to the financial results on a 100% basis for the asset management business. So what this is saying is that the BAM ticker is actually only 25% of the Brookfield Asset Management business, and then Brookfield Corporation, which is the BN ticker, owns the other 75%. However, the numbers are reported on a full company basis just to make things easier and to have a better comparison year over year. So with that being said, we can see that the whole company produced about $568 million of distributable earnings in the third quarter and about $2.2 billion of distributable earnings in the trailing 12 months now. The distributable earnings were up by roughly 8% year over year as well. So that is the growth rate on the company's earnings in the third quarter. Now, moving on, here are some overall business highlights from Brookfield for this quarter. Fee-bearing capital was $440 billion at the end of the third quarter, flat from the prior quarter and up $33 billion or 8% over the past year. Personally, I think that this is one of the more bearish points in the entire report, because fee-bearing capital should be increasing, as that is how Brookfield Asset Management makes its money. So if fee-bearing capital is not increasing, then it basically says that the company is not going to be earning more fees on the capital that it is managing. However, if we continue on, this says, in the third quarter, we deployed $18 billion of capital into investments. Brookfield and its partners acquired Triton, the world's largest lessor of intermodal shipping. They also acquired Data4, which is a major European data center network, and Oaktree deployed $6.5 billion across private credit. But going back to why Brookfield's fee-bearing capital was flat quarter over quarter, here is what I found to explain it. So this screenshot is Brookfield Asset Management's second quarter 2023 results, so last quarter's results. And here we can see that fee-bearing capital for Brookfield Renewables, or BEP, was $24 billion, and it generated $55 million of revenue in the second quarter. Now, if we take a look at Brookfield Asset Management's third quarter results, we can see that BEP's fee-bearing capital was $20 billion, which is a decline of $4 billion quarter over quarter. The fee revenue was also only $43 million, which is down $12 million quarter over quarter, and also declined by $65 million in the trailing 12 months. The same thing is also happening with BIP. BIP's fee-bearing capital dropped $3 billion quarter over quarter, and revenues declined by $8 million. In the trailing 12 months, BIP fee revenue has now declined by $44 million as well. So in the trailing 12 months, BIP and BEP fee revenue has declined by a total of $109 million. And this $109 million is a direct hit to the company's earnings as well, because there is not any increased expenses with this revenue. So I went and I took a deeper look into what is going on here, and I found this from the company's letter to shareholders. In order to align our interests, we charge our listed entities a management fee based on their market capitalization. So our results this quarter were partially impacted by the share price performance of Brookfield Infrastructure Partners and Brookfield Renewable Partners, or BIP and BEP. So Brookfield Asset Management earns fee revenues based on the market caps of BIP and BEP. So if these businesses' stocks are performing poorly in the stock market and their market caps decline, then Brookfield Asset Management sees less revenue and earnings from these businesses. Brookfield Infrastructure is still down 40% from its all-time highs, and Brookfield Renewables is still down over 50%. So when these stocks finally bottom and eventually start moving back up, then they will start adding to Brookfield Asset Management's fee-bearing capital and fee revenue growth once again. Over the past year, though, they have acted as significant headwinds for Brookfield Asset Management's growth. And Brookfield does say here in their letter to shareholders, "We believe the recent share prices are largely the results of negative public market sentiments, and their share prices will ultimately rebound." So Brookfield Asset Management does believe that these businesses' share price will eventually follow their fundamentals once again and recover to new highs. And when they do, they will be adding significantly to Brookfield Asset Management's fee-bearing earnings and capital once again. Additionally, BAM has $102 billion of capital to deploy, and of which $45 billion of that capital is currently not earning any revenues or earnings for the business. Brookfield expects to earn roughly $450 million in additional fees once this capital is deployed. The business also has $3 billion of cash on its balance sheet with no debt, so it has a very strong balance sheet that it can use to deploy capital however it sees fit. Now, moving on to the next screenshot, this shows us where Brookfield Asset Management's total capital raised is coming from. And we can see that in the third quarter, their credit and other businesses had a very strong quarter with over $10 billion of raised. So investors seem very bullish on private credit right now, and it looks like Brookfield is raising billions of dollars from this one segment. In the trailing 12 months, Brookfield has deployed $64.4 billion of total capital. $2.8 billion went to renewables, $20 billion was in infrastructure, $7.3 billion was in private equity, $12.7 billion was in real estate, and $22 billion was in credit. So the largest capital deployments for Brookfield have been in credit, infrastructure, and real estate. So this is where Brookfield is seeing the largest opportunities right now. Moving on, Brookfield has accrued $221 million of carried interest, and Brookfield's carry-eligible capital has grown by 74% year over year to $97 billion now. Carry-eligible capital is Brookfield's portion of the profits on the money it invests for its clients. When Brookfield produces profits on its clients' funds, it gets a portion of those profits for itself. The portion of those unrealized profits is called carried interest. And as Brookfield raises more capital and invests more capital, it also increases its own profit potential by having more capital to invest. In fact, Brookfield says its total annualized carried interest on existing funds is now sitting at $618 million. This means that if Brookfield can hit its expected returns on this capital, then on an annualized basis, this is how much earnings they should generate once the profits are realized. This is a significant amount of additional earnings for the business that should be realized over the long term. But now let's move on to the shareholder letter once again. And this says, central banks have made significant progress in lowering headline inflation. Economic activity has been resilient and labor markets have remained tight, particularly in the United States. This has led to a market expectation that interest rates have crested. However, it is worth noting that rates are still low on an absolute basis by historic standards. With this backdrop, the market has increased confidence in pricing risk, which has led to liquidity starting to come back into the capital markets. And with record levels of dry powder currently on the sidelines, we expect to have a very busy period of transaction activity through the end of 2024. So Brookfield is basically saying that they expect to have a very busy 2024, and they expect to deploy a record amount of capital. Now moving on, this says, we are well positioned to capture meaningful opportunities in private credit. With banks reducing their private lending and traditional capital sources becoming more scarce, alternative managers like us can fill market demand for these products. Private credit is expected to be the fastest growing asset class within alternatives, driven by a shortage of liquidity and an increase in demand for capital as significant debt maturities need to be refinanced. So basically, with bank lending becoming more scarce, businesses are having to lend from other sources, such as alternative asset managers like Brookfield Asset Management. Brookfield even says that private credit is expected to be the fastest growing asset class in alternatives, and that is probably why Brookfield is raising a record amount of cash in credit and deploying a ridiculous amount of cash, over $20 billion in the last year, in credit specifically. It's the number one place that Brookfield is currently deploying cash. Moving on, Brookfield continues and they say, "We have a strong 5-year organic growth plan. This year, we put forth the goal of surpassing $1 trillion in fee-bearing capital by 2028. This 18% compounded annual growth will come from all of our businesses, with particular emphasis on the accelerated growth within our private credit and insurance platforms, which are expected to grow to over $500 billion combined. Further growth is driven by our fundraising efforts across flagships and complementary strategies, which will propel our fee-related earnings to approximately $5 billion by 2028, almost all of which will still be stable and resilient fee earnings." So Brookfield believes it can grow to $1 trillion in fee-bearing capital by 2028, which is an 18% compounded annual growth rate. Credit and insurance platforms are also expected to grow to over $500 billion of capital, and the company is projecting fee-related earnings of $5 billion by 2028. Now, reading the bottom section here, this says, "Over the next 5 years, our realized carry will be small, but it is expected to provide a significant catalyst for distributable earnings growth in the years thereafter." To give you a sense of the magnitude, in 2029, Brookfield Asset Management is expected to realize approximately $2 billion of gross carried interest, which should grow to approximately $7 billion in annual gross carried interest realized by 2033. So realized carry interest will be small over the next 5 years, but by 2029, Brookfield is expecting to realize $2 billion in carried interest. And then by 2023, it is projecting $7 billion of realizations. So over time, as Brookfield Asset Management continues investing more and more capital, then realizing the gains on this capital, it will generate significant amounts of profits for itself. If these projections are met, then long-term, this could generate a significant amount of earnings for its shareholders. Now lastly, closing the letter to shareholders, they say, "The primary objective of the company continues to be to generate increasing cash flows on a per-share basis and to distribute that cash to you by dividend or share repurchases. As a shareholder, I love to see this, and Brookfield Asset Management wants to return 90% of its earnings to shareholders through dividends. So as the earnings grow, the dividend per share should grow as well." So now let's head over to Stock Unlock and take a look at Brookfield Asset Management's valuation today. So the company is expecting to grow its earnings by 18% over the next 5 years. If the company can also trade for a 20 price to earnings ratio, then this means that if Brookfield Asset Management hits its own projections, then its fair value is about $39 a share, or about 26.6% above where the stock is currently trading. The future stock price should also be about $63 over the next 5 years, or about 100% above where the stock is currently trading, which is a compounded annual growth rate of about 15.3% over the next 5 years alone. And again, this is what the company should produce if it does hit its 18% compounded annual growth rate and does trade for a 20 price to earnings ratio. And now let's see what the market is currently pricing in to the stock today. So the market is currently pricing in about 12.6% annual earnings growth and a 20 price to earnings ratio over the next 5 years. If Brookfield Asset Management can hit 12.6% annual earnings growth, then the stock is trading for about fair value and should deliver a 10% compounded annual growth rate. So this is quite significantly below what the company's own projections are, but still it is nice to know what the market is currently projecting. Now also, Brookfield Asset Management is projecting $5 billion in earnings for the entire company by 2028. So if we pull out our calculator and take $5 billion in annual earnings and divide this by 4, then Brookfield Asset Management's earnings should be about $1.25 billion in 2028. Now remember, the company does have the goal of paying out 90% of earnings as a dividend to shareholders. So we can multiply this number by 0.9, and this means that Brookfield Asset Management, the ticker BAM, should pay out roughly $1.125 billion in dividends to its shareholders by the year 2028. Now here on Stock Unlock, we can see that the company is trading for a market cap of about $12.87 billion today. So if we divide $1.125 billion by $12.87 billion in market cap today, then multiply this by 100%, this means that if Brookfield Asset Management does hit $5 billion in earnings by 2028, and pays out 90% of those earnings as a dividend to their shareholders, then the dividend yield on cost of shares purchased today should be roughly 8.74%, which personally I do think is a pretty attractive dividend yield by 2028 if the company can meet its own growth projections. Brookfield Asset Management is also selling for a price to earnings ratio of roughly 22 today, which I do think is roughly around fair value for this business. I don't think that it is trading for an expensive price, but I also don't think that it is a screaming deal today. So again, I do think that it is trading around its fair value. So personally, I am happy with my existing position in this business, and I'm not really looking to add to it at its current share price. However, I don't think that it is extremely expensive, so I'm not looking to sell this position either. So for me, I think that Brookfield Asset Management is just a hold in my own portfolio. I am also eager to see the business's growth to earnings really start to pick up in 2024, and to see that translate into dividend growth for investors as well. So I am expecting the dividend to start growing in 2024 and continue to grow over the coming years afterward. But that is going to wrap up the video for today, everyone. And if you did enjoy the video, then please remember to leave a like on it, as it really does help out my channel. And also, if you are interested in Stock Unalog and the discounted cash flow calculator that I use here on my channel, then you can get a 14-day free trial by going to stockunalog.com. Also, if you are interested in getting my thoughts and analysis on these businesses' earnings before I make YouTube videos, then again, consider joining my Patreon. I also post all of my buys and sells over there, and you can get Discord access to ask me questions directly. So you get all of that by joining my Patreon, and you will also be supporting my YouTube channel. But that is going to wrap up the video, everyone. So thank you so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.